We are with the last speaker, so this is one of the clearest minds in crypto world. Really, he has more than around 200,000 people following her in Twitter. I don't know, the network's really amazing. It's probably you are following her because it's really amazing what he's learning and teaching us. So thank you very much, Tascha, for staying here. And thank you for all the knowledge that you share with us. That's why it's so important to have women in our crypto space, because that's the kind of amazing knowledge that I have. Thank you very much, Tascha.
All right. Hola, ¿cómo está? Okay, that's all the Spanish I know. Switching to English now, sorry. So I spend a lot of time researching and thinking about Web3, okay? The reason is, really there is no question in my mind that this is a groundbreaking technology that is going to change how the global economies work forever in the coming decades. And I don't think most of the people realize the profound implications of Web3 and how it's going to change the society and economies. So today I want to cover a few things from the macro point of view, because for those of you who don't know me, my background is in macroeconomics. I worked in macroeconomic consulting for many years. But I'm also a startup founder. I founded a software company in the Web2 space. And right now I spend a lot of time in Web3, both doing angel investing and advice projects as well. So I want to talk about mainly three things today, okay? I want to first talk to you about why Web3 is so important from an economic point of view, because I know everybody comes into Web3 from a different background for different reasons. You may be here for the tech, you may be here for the money, you may be here for the fun, I don't know. But to me, there is a very strong economic case to be made for why Web3 is important. And secondly, I will also briefly tell you about what I see as the next investment themes in Web3. And finally, this is probably most people will be most interested about, is entry and exit in the market, and how do you time your market entry and exit to make sure you don't swim naked in the market that is so volatile as crypto and Web3 right now, okay? So that's what we're going to cover today. So since we have very limited time, in the end, if you want to know more about any of these things, I will also tell you where to go to find more information, okay? So first of all, I want to talk about is the economic case for Web3. So this is a chart that shows you, which basically plots the GDP per capita of different countries versus percentage of digital asset adoption per country. Okay. So there is something very strange about this chart. I don't know if you notice. Can you see what's abnormal about this chart? So the strange thing is there is very little correlation between digital asset adoption and GDP per capita. And this is strange because if you think about, in most cases, okay, technology adoption, usually rich countries have more technology adoption. For example, richer countries have more mobile, smartphone adoption, internet penetration, broadband adoption. But this is not true for digital assets. Okay? So digital assets, crypto, blockchain, is a worldwide phenomenon. So the question is, what makes blockchain different compared to other general purpose technology? Okay? And also, just to put things in perspective, if you add all these bubbles together, right now the Web3 adoption is about 300 to 350 million people worldwide. So is this a big number or a small number? You may think this is not a big number, right? So 300 million people is not a big number in terms of as a relative to world population. But here's the thing, okay? We are talking about this is an asset class of less than $1 trillion. I just checked 20 minutes ago. The total market cap is $780 billion right now. Okay, so keep that number in mind, right? Guess how big is the global equity market market cap? It's around $100 trillion. And what's the equity ownership worldwide? How many people own stocks and equity? You would think that $100 trillion, that's over 100 times more in market cap compared to digital asset, right? So there must be a whole lot more people who own equity compared to crypto. But that's actually not true. So global equity ownership is actually just slightly higher compared to the crypto digital asset ownership, about like around 500 to 600 million people worldwide. So if you compare these two numbers, market cap on one side and number of ownership, number of people who own the asset class on the other side, what tells you is that digital asset, crypto, it's really drastically lowering the entry barrier of owning capital worldwide on a scale of magnitude that has never happened before in history. Okay. So that's the strange thing about this technology. And on top of that, Web3 is creating the kind of scalable co-op ownership model that allows users and contributors of product to actually benefit from the product's growth, to actually, get the upside, get a share of the economic pie that's created by the new products and new projects in the Web3 economy. So these factors combined together, that creates a very strong ownership alignment that is fundamentally supporting the Web3 and community growth that we see today. So when you see 300 million people worldwide adoption, a lot of people will tell you, oh, this is because crypto is all speculation. It's tulip mania, right? So yeah, there is a lot of speculative activities, and that's driven a lot of, you would say, adoptions in Web3. But fundamentally, it's because of the profound changes in economic models that we see that's innovative, that is made possible by the blockchain technology, that is fundamentally driving the adoption of Web3 economy. So a workhorse tool of the Web3 economy is obviously tokenization. So tokenization is really nothing new. In Web2, we have things like airline miles and credit card points. Those are essentially tokenizations, tokenized values that are siloed within a single platform, right? But when you combine that tokenization with unified issuance standard, worldwide liquidity network, borderless network, interoperability, programmability, that's where magic can happen. It can create new expressions of latent values in the economy that unlocks new layers of GDP, creates new industries and professions, and also creates new ways to distribute incomes. So on the macro level, that's why, I think the Web3 technology is such a big deal. And it's going to, the economic models of Web3, how I see it is, it's going to penetrate more and more industries and economies in the future, in both real life and digital economy. Okay. So the next thing I want to talk about is the next frontier or the next investment themes in Web3 adoption, which is really, I think some of the previous speakers also touched upon this point. We really are at a juncture of this general purpose technology is crossing the chasm, if you will, from early adopter phase to the mainstream adoption phase. So a lot of people say, in the next 3 to 5 years, we may see 1 billion users coming to Web3. And when that happens, we will really, have, I would say, crossed the chasm. And at that point, we are going to see a lot more consumer use cases start to emerging. But we are already start to seeing that right now, okay? But the thing is, a lot of times when you see technology adoption, it goes through kind of a ladder format, right? It goes up, you have a wave of adoption, and it plateaus because there are a series of problems and issues that the industry or the sector needs to solve. And once those problems get solved to a sufficient extent, it triggers another wave of adoption, and then you can step up another ladder, and things goes on to the next wave of adoption. So the thing is that right now we're at this relatively flat phase, right? So adoption growth is slowing down, and for a lot of reasons. And most of the people, they will say, oh, because we are in a bear market. Well, that too, but also it's because, it's really a lot of things in terms of the technology and the applications and protocols that are built on top of the technology. Those need to improve, and those need to be built better in order for us to reach the next stage of, the so-called jump up the ladder in terms of adoption. So I listed some of so that's why I said, the title of the slide is Today's Challenges of Web3 Will Be Tomorrow's Investment Opportunities, because any projects or protocols that can successfully solve the major challenges in terms of adoption today is going to be among the most, promising investment opportunities of tomorrow. So I listed some of the challenges on this slide. For example, for everybody who used DeFi, I was just talking to a few of the other speakers about the user experience of DeFi today. Is pretty terrible, okay? People who are, professional traders or who regularly, trade financial products, it's very hard to use the current version of DeFi. It's everybody agrees it's a very promising space, right? But a bunch of really the user experiences are sorely lacking, I would say. And also, in order for DeFi to really go to open up the door to a bigger TAM, total addressable market, the way I see it is really needs more real economy integration, right? One example is if you think about the lending and borrowing on chain, right? So far, most of the collaterals that we use are crypto collaterals that you can secure on chain. But the thing is, that's only a very small part of the total collaterals available in the world, right? So most of the financial collaterals that can be used for lending and borrowing in the world are not on-chain. So that is like a huge, huge market. If that can be integrated into the on-chain economy, that's going to unlock the next stage of growth for DeFi. So that's just another example. And also for the NFT space, there are a lot of usability and front-end challenges, both on the front end and back end, in order for NFT to reach a more mainstream stage. And one of the issues that I see is there's this challenge of mapping NFT with the underlying asset. We cannot do it even very well for digital assets, not to mention the real-world assets that is not being run on-chain. And also some of the infrastructure challenges, such as the cross-chain transactions and messaging, that's what I see is also coming up as more and more of a bottleneck for the ecosystem growth in different blockchains. And finally, is an area that I'm super interested in right now, is the so-called Web 2.5 projects, which I think is going to be the next wave of mainstream adoption, or at least going to be one type of projects that will unleash the mainstream adoption for Web3 economy, is to use the distribution channel of the Web2 economy, but combine that with the Web3 economic model, combine that with tokenization to kind of generate the new growth drivers and new business models for different existing businesses that are already in Web3, in Web2 that has a viable product that people will actually want to pay money for, which is something that was lacking in the so-called crypto native projects that we've seen over the past financial cycle. So the third thing I want to talk about is market timing. So this is not something that people will necessarily care about when we are in a bull market, when things are forever up only, right? So, but this is something I would say you definitely need to care about. This year is a case in point, right? So when you see huge volatilities, both upside and downside in the market. So I want to talk about some indicators from a macro level, okay? I know there are some previous speakers that cover things like technical analysis and so on. So there are different methodologies that can help you to really get a sense of where the market is and to help you make the decisions of the entry and exit, right? So I'm going to talk about something very simple and very easy to use. And I think everybody can understand and everybody can actually use it, okay? So this is a type of indicators that is the so-called market breadth indicator. So essentially it measures how many tickers or how many tokens in a market that is actually participating in a particular market move. So if the crypto entire total market cap goes up 5% tomorrow, it can be driven by 5% of the tokens trading in the market, which we have like about 10,000 actively traded tokens in the crypto universe right now, right? So it could be from 5% of the tokens making a move, or 10% of the token making a move, or 90% of the tokens making a move. So usually, as a rule of thumb, is when you have, when the market breadth is higher, meaning there are actually more tokens that are participating in a particular market move, whether it's to the upside and to the downside, it's a signal that you have very strong either buying or selling pressure or force coming into the market. So it's a very mechanical way to give you a lot of information in terms of the temperature of the market without resorting to any kind of macroeconomic analysis, right? So, like for example, this year we all know like there's bear market in stocks, bear market in crypto, and you all know like it's largely because of central bank policy, right? And then you hear a lot of people talk about, okay, what's central banks going to do? What's the Fed going to do next month? Are they going to raise rate? By how much? Are they going to pivot? And so on and so forth. And what does that imply for different risk asset market? But, reading that kind of tea leaf is very, very hard, even for the professionals, even for economists. And I can tell you, I'm an economist, right? Most of the times, the projections by economists are very, very wrong. So there is an industry joke, like within my profession, it's like, why do economists exist? To make astrologers look better in terms of their predicting power. So, but the thing is, when you actually look at the market breadth of the market, just using the behavior of the specific issues, specific tokens that exist in that market, you actually do not need to resort to any complicated macroeconomic analysis to actually give you a good idea about the macro climate of the market. Okay? So here in this chart, the green bars here, what is plotting is percent of tokens that made 20% up moves in a month divided by percentage of tokens that made 20% or higher down move in the market. So it's a ratio of tokens moving up divided by tokens moving down, okay, in a particular month. And you can see that when this ratio goes up a certain threshold, which is the green bar here, so that when this ratio goes up, like actually the medium level, historical medium, it usually corresponds to the period where it's actually good to be in the market. And when this green bar does not exist, is not present, that's when the market is not behaving in a healthy way. So it's just like there's nothing magical about this particular indicator, or 20%. You can use 25% or 15%. There's nothing magical about the 20% number, but it's just one indicator that gives you a sense of the power of just looking at the market breadth that give you a lot of information. And in fact, if you just time your market entry and exit using this one indicator, you probably do better than 90% of the investors in crypto. Okay, so this is another type of another example of the market breadth indicator. Here it's plotting the percentage tokens above the 40-day moving average. Again, there's nothing magical about 40-day. You can plot 50-day or 30-day, 100-day. It's just that it gives you a sense of the market, the health and the temperature of the market, right? So you see that this on this chart, the red bars here is when this ratio, so the percentage of tokens that are moving above its 40-day moving average, when that percent of token drops to a certain level, which is the green bar here, is when this ratio is very, very low. Okay, it's usually a very good point of entry into the market, because that's usually the, whether it's a local or generational bottom, so to speak. And vice versa, for when this ratio goes up to a very high level, which is the red bar here, that actually usually tells you the market is overheated and we're going to probably see a downturn very soon. So this is the type of, so again, there's nothing magical about any of the numerical numbers that are plotted on this chart. But this is, I just want to give you an idea of like, when you just look at simple things like market breadth that give you really all you want to know about how healthy this market is and whether you want to take any kind of action in this market. So if you look at by this criteria that we just look at this chart, okay, so this chart, for example, is generated, this version is generated 2 days ago, okay? So currently we're in this, you probably cannot see this very clearly, but we are not really covered by either red or green bar here. So this part is actually no coverage, okay? So same thing here, there's no coverage here. It's just white. There's no extreme level. So it's really that tells you the market condition is it's not really exactly selling off, but it's not like geared ready for a bounce either. So the action, the action to conclude from this particular type of indicator that would tell you is that right now, it's basically you should be sitting on your hands doing nothing. Okay? So that's all I want to present to you today. If you want to know more about any of the things that I covered, you can follow me on Twitter at Tascha Labs, or I have a weekly newsletter that's free. You can go sign up at tashalabs.com/newsletter. And if you have any questions, we can, talk while we have a drink. Okay? Thank you so much.